The New York Compensation Insurance Rating Board has released a new formulation for the workers' compensation experience rating modifier. Most business owners know the experience rating modifier as the X mod, the E mod, or just the mod. The modifier is a debit credit system, and it's meant to reward employers with better than average workers' comp claim experience over a 3-year period of time, and charge more for workers' comp for employers with higher than normal or expected claim experience over that time period. In the board's opinion, the rating system prior to October 2022 did not reward good accounts sufficiently enough, and on the flip side, did not, well, let's just say, punish accounts with high loss ratios sufficiently enough either. The new system is going to result in two things. Employers that exert good risk control processes and procedures and have fewer claims than their peer group will see their mod and their premiums go down by a greater margin than in the past. And you guessed it, employers that don't have good risk control and have higher claims than their peers are going to get hammered by this new formula. For the second group, the only good news is that the board has put in a transitional factor this year so that your mod can only go up by 30 points, which is pretty significant. But without that transitional factor, some risks could see very large increases. The intent of the board's actions are to incentivize workplace safety. That's good for you as the employer, that's good for your employees, that's good for your company, and that's good for your insurance costs. That's no secret. Unfortunately, many employers, even large employers, don't know where to start when it comes to workplace safety and risk control. If that's you, we should talk. We help our clients in this area and see great results in the short term, and I know we can help you too. Now, I'm not going to dive into how the formula is changing. It's pretty complex, but I can tell you that larger employers will see significant changes this year and moving forward. On top of these changes, the New York Department of Labor has also recently announced a change in Code Rule 59. Larger employers who may have had safety issues in the past may be familiar with this workplace safety and loss prevention process from the DOL. If you have over $800,000 of payroll and an experience mod of 1.2 or greater, you will be required to conduct a comprehensive safety and loss prevention audit and consultation. In and of itself, this isn't a big deal, but what is becoming a big deal is that more employers in New York will be subject to this ruling, like a 4-fold increase. And for those employers in the New York State Insurance Fund who are subject to a Code 59 ruling, they may be surcharged 8 to 14% more on their workers' comp premiums. It's sort of a double whammy. Your mod is going up and you're going to get hit with this surcharge. So what's the answer or the solution? I think for larger employers who teeter on the edge of a 1.0 mod or higher, you need to definitely be taking risk control seriously. If you don't, insurance costs could price you out of the market and create serious disruption. For employers who fly below that 1.0 mark but don't have a written safety plan or risk control plan that's practiced daily, then I think it's time to invest in safety. Under this new formula, it's only going to take a couple of large claims to tip the scales out of your favor. I've often said that employers who have been lucky and have had no claims or low claims, luck will only run so far. Installing a proactive risk control system is not costly, and it actually helps increase productivity and employee retention while decreasing insurance costs. Have other questions, issues, or concerns relative to your workers' comp experience mod? Or you want to learn how to control claims and the mod? Then let's chat. My contact info is coming up and it's in the description box below. There's a link actually there where you can book a call directly on my calendar. Thanks for watching, and if you found this content helpful, please give it a thumbs up and subscribe. Thank you.